joining us, everyone. And excited to talk about Web3 from an investor perspective here. So we have a couple different flavors of investors, if you will, from the backgrounds. So we'll start with that and give us a quick introduction.
Okay. I'm Jonathan Patty. I'm a partner at CoinFund. We are a Web3 and blockchain asset management company. We have a liquid hedge fund that I co-run with my partner, Seven Kings. And then we have Steve and Series A focused venture vehicles.
My name is Tracy Lee. I mentioned I'm one of the founding partners of Istari Ventures. A quick background on me, I worked in the Silicon Valley for 15 years in the tech space, and then joined Coinbase in 2018, and then went to work for Circle, mainly building the product around USDC as a payment solution. And then that kind of led me to building a venture fund, especially specialized and focusing in that vertical as well.
Awesome. And I'm Bala, Varadhan. I'm at early stage crypto, blockchain, Web3 focused venture fund named Avon Ventures. We're part of the broader Fidelity investments umbrella based in Boston. We've largely done equity investments in the financial services space. The financial services companies serve crypto, but have since sort of pivoted or expanded, if you will, towards Web3, which is a great segue to the first question I want to ask you both is, how do you define Web3 as it relates to investments?
Sure. So how do I think? I think, so the first words that come to mind are centralization, autonomous. It's really the stripping out of the centralized third party as part of the transaction. I think DeFi at its core is Web3. And I don't think it necessarily just applies to people who try to use it now as the internet. I think centralized finance was successful in stripping out that centralized third party. So for me, it's the best use case so far, or best analogy for Web3 and crypto. And it's what I see the future of all finance like. That's what I focus on at CoinFund. It's taking traditional market infrastructure and improving it by the reduction of that trusted third party. And that's how I think about it. I'm excited to hear what you think about it, Tracy.
Yeah. Interesting question, because Bala, I remember we talked about this, right? So basically, what we started was Bitcoin white paper. We talk about this thing, right? Basically, the headline of Bitcoin is a peer-to-peer money transfer solution, right? I think today people tend to forget about that. Really, how I think about crypto, everything started with the blockchain can actually facilitate programmable money, transfer, like distributed ledger, anything around to facilitate money transfer or ownership in a decentralized way.
Yeah, I'm really glad you mentioned that point because, for us, when we think about Web3, it's not tokenization for the sake of tokenization, right? Blockchain is the rails by which you can create a distributed system, create ownership patterns for users that are not possible in Web2, create composability in ways that are not possible in Web2, interoperability across platforms. And those three principles to us have been defining Web3. And then you take those and you apply it to these cases, right? Financial services, that's DeFi. To us, that's exactly the same as Web3 is DeFi and finance. And then if you think about other use cases, one that we've been exploring is sort of creator economy. There's a couple founders here in that space and use of gaming and those types of sort of use cases where disintermediation, ownership, and composability can create new types of innovations that directly impact how everybody interacts with artists, the creators, collectibles, digitals, et cetera, et cetera. So I'm curious, within Web3, again, within the definitions that we put out there, what's exciting for you all in the next 2, 3, or even 5, 10 years?
Everybody knows what we're excited about talking about what's up.
Sure. I think I spend the majority of my day trafficking in DeFi, different environment protocols and centralized exchanges. Talking to builders who are building there, and as much as I'm happy where we stand, and just the fact that we're able to create this, the usability, its stability has come a long, long way. I think, so the infrastructure is there and it's overaddressed. I think the bridge, anyone who's used the bridging experience is still one of the scariest things for you can do. It's scary for a PA. It's scary when I'm doing it with hundreds of millions of dollars with a firm that's registered with the SEC, and you have to act in a completely compliant way. And it's just that area that I'm looking forward to improving. I think an unlock of that, where you become almost a wallet that's completely interoperable, that's embedded on a mobile device. Like, that's where I see this going. I think we need to start bringing DeFi or just Web3 more mobile. No one's really solved for it yet, and there's all this talk of mass adoption. How do we get to this next stage? But we're not talking about the fact that, well, how did kind of the iPhone get to the next stage? How did Web2 really get to the next stage? Because having everything on an app and everything available and great UI and great UX. Not that anyone describes crypto as a great, anything in crypto as a great UI or a great UX. So for me, that's what I'm excited about, increased usability. I think there's a lot of people focused there, and for me, I think this will be the next thing.
I'm going to pick on you for 1 second here, specifically with the wallet piece around usability. One thing that we struggle with is, what does that look like? Does every app, you swap now launching their own wallet? Do wallets become native to the app? Does it become something like an app store? Does it become something that you don't ever see in any way, shape, or form? Where do you kind of fall on that spectrum?
Yeah, I think you're going to have, here's where it gets tricky, because there are some more centralized parties that are doing this aggregated wallet. I've seen some of them building that will have Uniswap embedded there. In Uniswap wallet, you can essentially roll your wallets up into one aggregated wallet. Now you introduce this third party who's hosting. So, where do I went? I think there's secure storage protocols. I think Fireblocks is one. I think the integrations are going to be built in a way that you will be able to aggregate on your own using a decentralized network to aggregate your kind of wallets across different protocols. And that is when you don't even realize you're going to be bridging. I think there's going to be bridges embedded as well, built in. Everything's going to be built in to some holistic wallet that's something that runs that just kind of run the entire ecosystem.
Yeah.
I mean, speaking about the wallets, right? I think that's actually to talking about corporate Web1, why we're so excited and bullish about kind of building the payment ecosystem. Like wallets essentially is kind of the biggest component. So for me personally speaking, I really want to bring crypto to the mass adoption for everybody walking on the street to be able to use crypto or have some kind of way of transacting via cryptocurrency. So really thinking strategically, the wallet or anything related to payment infrastructure, we actually believe that's the easiest way for the regular people to adopt. Right? For me, I'm very kind of passionate also about infrastructure. Right? I think for technology-wise, that's the backbone of this industry. We have to have tech stacks, we have to have massive storage, middleware. But typically, these need a very specialized skill set for founders to build these applications. But also their partners and the companies they usually integrate are also with that, that kind of ground. But for really people, if you talk about your grandmother or just your mom or something, want them to use crypto, I just wouldn't think, the infrastructure startup is really going to impact them. Right? I really think on application layers, how we can push crypto to be somewhat used in their daily life, that's more exciting for me. So.
And on that note, one thing I've always appreciated about the way you all invest is it's not myopic, right? It's not just payments, it's purely on-ramp, off-ramp of fiat sector currency. It's much broader than that. I'd love to hear your thoughts on what do payments look like in a Web3 world in 5 years?
Yeah, so here, right, I'll give you like one story I heard when I was actually traveling in Southeast Asia. So the people who are in the Philippines have told me this. Axie, the game was super popular in Philippines. People actually own Axie tokens. What they were able to do is, if you go to a local store, or coffee shop, you can use your phone with a QR code to buy this cup of coffee, use your Axie tokens. So I was extremely shocked. Right? I think in the US, we all know it's extremely hard for us if we have crypto wallet to use it to pay bills, to buy stuff in the store. For a country, right, considered to be an emerging countries, I think they're adopting this technology way ahead of us. So that's kind of, a comeback to your question. Right? That's one of the use cases we're thinking. Give it a few more years, we really envisioning this world, more countries, more regions are actually able to use crypto in the real world, right, to buy stuff, pay bills, and transfer money. So I think that will probably come in the next few years. We already see Latin America has been using credit card to connect with the wallet to do stuff. But that's really just one of the use cases. So we're also looking at think about payrolls. You can pay people in the company, either by crypto tokens or actually pay fiat, but using a blockchain just as a real solution converted back to USD. Right? Basically, the two parties don't really know crypto is in between. That's kind of like another use case we're very passionate as well.
Yeah, absolutely. There's a lot of things that we, or at least I take for granted here in the United States, that's part of the promise of Web3, right? It's the international aspect of it. Use cases you mentioned, use cases that we probably haven't even discovered yet, but that have applicability in areas that may not have necessarily the same infrastructure or systems that we often have in countries here. And even here, there's a lot that's lacking, that's for sure too, right? So to take this in a little bit of a maybe a less positive direction, obviously the last 18 months have been tough for everybody, investors, founders, you name it, right? I'm curious to get a sense of how, if at all, that's impacted your outlook for your investment decisions. So inside, the equity side.
It was tough. It was, I would say, in the run-up to it, it was equally tough for different reasons. 21 was one of the most stressful times of investing in my career. Just the speed at which deals were moving, the speed at which money was flowing into crypto from new participants on the institutional side and on the retail side. You saw valuations just really ratchet to levels that we were surprised. And the speed at which they're getting done was I'm not going to say that people weren't doing their due diligence, but the speed that we're getting done was wild as well. So what happened? I think what we saw was that there was just a tremendous amount of supply that was funded. And I think 2022, you saw that supply run off. And there wasn't, once these things went liquid, they had testing schedules. And so you saw a lot of, now we're oversupplied. So for me as an investor, I'm very excited. Now, why? So there was in the gaming sector, saw a lot of game-specific funds come out. I should mention Axie. But there was a deal back in 2020, late 2021. Token was under the $500 million market cap. That token today trades at $800,000. So there are, and back then it was pre-product, pre-revenue, now working product, and really taking this product to the next level. So those are the opportunities that I think are out there right now. So I'm very excited. We haven't changed our philosophy. We stay very rigid with our due diligence process, yelled at by LPs during that time for that, but I think at the end we made a decision, and I think the opportunity is very bright right now across the
Yeah, I think John, ended on a very positive note. So I'll continue. I think what we're seeing right now happening is actually the market is turning back. We see more investors, more VC funds are deploying money right now, where they were not doing in Q1. Right? And I think another positive note, not necessarily good for the market, because we are seeing the valuation has been dropped, right, during this bear market, which I believe on VC side, we think is actually helping the founders to be more diligent, right, to be more hands down, building the products, rather than just go out and chase for the money. Right? We have all seen, maybe last year, the fancy crypto parties are out there, right? Our crypto people have a reputation to throw those parties. So I think this is actually a good time for founders who actually have the passion about crypto to really focus on building, right? Building the product, launch something, have an MVP before actually raise money. And I think that's actually a very good kind of a practice for founders. So that's overall what we're seeing in this conversation.
And Greg, I would just add one more thing to what you said. I think you don't build good habits in bull markets from a builder side, from the investor side. You build really good habits during bear markets. And you have to run things leaner. You take a second look at everything. You have to be ruthless with kind of your time and how you focus. So I think that I love funding teams and deals during bear markets because they tend to come with that mindset rather than the bull market. It's the leader.
Yeah, one exercise that we did for between 2021 and 2022, is looking back on those 2 years, is how many deals did we do that were had to relax one of the factors that we typically look at. And if you look back on that and you say, okay, only 10% we relaxed in this deal, we can feel relatively comfortable with that. If it's 15, 20%, well then either our fundamental way of investing has shifted or we're doing something wrong, right? And so something has to sort of correct. And I completely agree to your point that it's either go back to see if you can go back to basics there. And I think that same philosophy, to your point, applies to we've seen. So I think there's a couple of your same transact workshop from Celeste that they've had a lot of these conversations with them and seeing them think about it from that side of the fence too, right? And having that alignment between founders and investors, thinking about 5 years out, 10 years out, rather than 2 months out, 3 months out is such an important thing that I think got a little bit lost perhaps in the world together. I know we're probably coming a little bit close on time, but I just want to take maybe one step back away from Web3 or any specific substantive area, and just get a sense of, both of you, I know have been investors for a number of years, within this role, outside this role. What's been sort of the key learnings you've had, or maybe said differently, what is now the way you think about investing moving forward, having been through everything that all of us in this room, I'm sure, have been through for the last few years?
I'll go. I think when you're investing in open source technology, as your kind of medium you're playing, you have to really challenge yourself constantly. And what I mean by that is you could have a thesis, we have thesis meetings where do we want to be, hearing rate or two, so really optimistic hopes with more than $0 proofs. And you have to really have a 3-4 month study internally to make sure we're all on the same page of what we think is going to win, why it's going to win, and what are the verticals outside of that or around that, the ecosystem now that we should be focusing our time. And what's wild about though is something can come up 2 weeks after that and completely just kind of eradicate all your thoughts. But it's brand new. It's not, I don't want to say a fork, it's a different version. It's faster. It's cheaper. And I think you're in this constant cycle where you have to really challenge your thesis. You're more in crypto than I've ever done in traditional finance. because the space moves so fast. It is such an massive testament of technology. You're seeing what works in real time, failing in real time, new pain points coming up, and you really just have to challenge yourself. You can't be, you cannot have.
When I think the testament to Coinbase, you have so many different vehicles that you build, a global reach across not just geographically, but across segments. And so being able to see that across different parts of your organization, I'm sure is interesting to sort of, not an arbitrage thing necessarily, but
Yeah,
take those learnings.
I think one of the most frustrating ones is when you build out our liquid portfolio on a certain thesis, and then you see a new seed project and validates the entire thesis. I think that's the fun part of it. That's awesome.
All right, I think from our side, I'm gonna steal the story from, my partner Anthony, especially on the DeFi side, right? So we've gone through this bear market, used to be DeFi summer, now there's dried up and liquid, right? So one of the key learnings we had, proven to be true, is basically we see a lot of DeFi projects are coming out, especially from Silicon Valley. A lot of tech founders are really trying to innovate in the space. But there's really one key component that we're missing, which, it really needs somebody on the founder or the foundation, initial founding team to have some kind of tried out program. Right? If you were building a lending protocol, we had a project where we were building a lending protocol using Bond to help with, crypto foundations. But the team was so young, right? 220-something founders. Nobody had actually worked in the banks before, no credit officer, no risk officers. And they're trained to launch this massive DeFi lending protocol. And we found very quickly this just failed within a few months, right? So that's really, for us, it's the learning, we're trying to tell the founders, help them. It's really like, if you're not experienced, a TriFi person, please have somebody on your team really have that 10, 20 years experience to help you to structure this company. Right? So that's really one of the number one key learnings. But I think the other one I'll do real quickly is we actually think a lot of Web3 founders have never worked in the Web3 before, right? The Web2 founders or worked in the Web2, converted to Web3, which we realized the learning curve is just so steep. A lot of them are actually stuck with a mindset, right, running a Web2 company. And they're not really open to take advice from crypto native VCs or founders. They're stuck in their own way. For us, that's one of the biggest kind of risks, even for investments. So, we really also encourage founders to try to actually do a side project or be a part of crypto companies before you actually consider launching a company in the crypto space. So these are a couple of things, right? There's if we have more stories.
There's always more stories for us to tell, right? I think from my end, three quick things. The first two are on the realm of flexibility. So one, I just sort of talked about, right? Looking back and not being stuck to just because it worked from 2018 to 2021 doesn't mean it's going to work from 2022 onwards. The second thing is flexibility in terms of your theses as well. So, like in private equity, we had the luxury, I think, of investing in cross asset classes, right? If one asset class is being hammered, well, now you can sort of play that cross asset class arbitrage in terms of multiples or just opportunity in general. But in crypto, by nature of the mandate that we have to do, that you both have to some extent, you're fine to the beta of crypto, Web3, blockchain, however you define it. So one thing we've done is think a little bit more broadly. We've made all our investments for the most part in financial services and crypto. How do we think more broadly about that within our mandate, but sort of not just get internal portfolio hedging, but just think about what does that opportunity set look like and not be confined to a specific beta of a narrower set of assets to look at, right? And then the final thing is that, we look back on our founders and portfolio companies that have made it through the bear market or they made it through, I don't know, making any macro statements, you're quite ahead, but are well positioned to succeed. And at the end of the day, it really comes down to the contract. I know what I'm good at, I know what not good at, and what I'm not good at is the skill sets that founders have. I just have a tremendous amount of admiration for what they do, what they're able to endure, dealing with us, and so testing that metal and being able to get through the last 12, 18 months, a tremendous amount of respect for them, and that's ultimately what they end up here in this stage every day. With that, a big round of applause for our two panelists here. Thank you so much.